Happy New Year and welcome to the first market summary of 2025. I'm Talk Stocks with me, and today we are kicking off the year by breaking down the key highlights and trends shaping the global markets as usual. From the US large caps to small caps, the Nasdaq to the Canadian and Nigerian markets, oil, and even Bitcoin. This is your one stop shop for understanding what's driving the market and where opportunities may lie. Let's dive into the trends that could set the tone for the months ahead. We're going to begin this week's video by performing a top down technical analysis on the financial asset VOO, which is the US large cap stocks, to establish the layout of the land and gather the overall market sentiment. Let's get started straight away. Before I get into this video, I would like to give a quick disclaimer. I am not a financial advisor. The content of my video represents my personal opinions and is provided for informational, educational, and entertainment purposes only. This information is not intended to be legal, financial, or an investment advice. As always, conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts. Let's begin our top-down analysis on the financial instrument VOO, which is the US large cap stocks. Straight away, by top-down analysis, I mean I want to perform an analysis starting from the overarching time frame, which is the monthly time frame, establish a kind of sentiment, then go to the next time level, which is the weekly, and finally the daily time frame. So by understanding what is happening across these three time frames, then I can infer the overall market sentiment. Remember, guys, it is important that we have alignment across all time frames to have more confidence in our technical analysis. The monthly time frame is like the federal government, it controls the large movement, while the daily time frame is more like of the municipal government, where the effect is not as important as you go up the governmental hierarchy. So straight away, I have the monthly candles here, and I have the simple moving average also demonstrated on this chart. And what basically I want to see is how the price is reacting to this simple moving average. So clearly you can see that the candles, which is the price action, has been largely bullish. You see, it's above this 10-month simple moving average. And whenever they are selling, most times you see that this simple moving average has kind of acted like a dynamic support. You see, when it sold off here, buyers stepped in and pushed the market up. Now, but what can I gather from this? I can clearly see that after this very bullish candle in November, the next month, December, was kind of bearish. And if I turn on the volume, you can actually see the volume, the volume of transactions in that December, which you can actually see has been the highest volume within the last 6 months. So it shows that the selling volume or the selling pressure in December is kind of controlling the general dynamics in the monthly time frame. What I also want you to see is that this candle is something that is actually referred to as a dark cloud cover. So what that means is that the candle actually starts above the previous month and goes as much as, in terms of height, to at least one third, or if mostly I would say at least half the height of the previous candle. So this is something we call the dark cloud cover, and it's generally a bearish candle and a sentiment for like a potential reversal in the bullish momentum we've experienced, for I'll say the better part of 2 years. Currently, this is where we are. You see the current candle that is still formed is still trapped within this body of this bearish candle. Now, what can we also add on this chart? We can add the MACD to understand what is happening also, because the MACD, which is the moving average convergence divergence, tells us the momentum currently in the market. And you can actually see that the momentum is bullish, but what you can see here is that the height of the bar, which represents the difference between the MACD level and signal, is actually decreasing. So it means the momentum is decreasing. You see, it means buyers are actually not in full control of the market anymore, that the buying activity is decreasing. So you can see from November, can you see the height here? It's going lower. So this is another way we can infer what is the market sentiment. And what I can see right here is, first, in the monthly time frame, I can see a dark cloud cover, which is a bearish single candlestick pattern. The volume in November is the largest volume in the last, I would say, 1 year, and this volume is a selling volume. Thirdly, the momentum is decreasing. This bullish momentum is decreasing. And finally, we can use the directional moving index to get our last gauge of sentiment on the monthly time frame. So once I quickly customize the settings, let's look at what is happening. Now, straight away, you can see that it's been largely bullish, even in the monthly time frame. The ADX is above 28, which actually confirms a strong bullish trend. But what I want you to see is that this plus DMI, which measures the strength of the bullish trend, is also decreasing in slope. So you can see here that the slope was actually positive. So it was a strong slope along with the ADX. But you can see that since November also, there's kind of been a kind of reversal in the slope of the plus DMI. Now let's go to the weekly time frame also to gather sentiment. Now, when I'm on the weekly time frame, I like to look at the EMA, and I like to use two EMAs, which is the 10 EMA and the 20 EMA. The 10 EMA is the blue curve, and the 20 EMA is the red curve. Now, clearly, what you can see is that most of the time you see that the price action has even been on top of the 10 EMA, showing how bullish the market has been. Now, what I want you to see now is the candle is now within this band. So within the 10 EMA and the 20 EMA. So definitely that is telling you the market is not as strong, not as bullishly strong as it was in the previous week, because now we are here. And what can happen is we can either go here, which is down, or above the 10 EMA. Also, what I highlighted here is this head and shoulder pattern that we've been tracking, I would say, since the second week in December. You can actually see here that the price action is still stuck within this right shoulder. You see, and this, if you can also look at this kind of downward slope has what is actually happening currently. So you see, market is actually trending in the downward slope, in a downward bias. And so until we break this slope here, before we can even see some kind of positivity in the market. Now, apart from that, let's look at also the candles. Is there any candle pattern that we could see here? Again, this is the dark cloud cover here that we can kind of see here, where price starts above and it kind of goes to almost like 1/3 of the height of the previous month. Apart from that, where we have not seen any other interesting candlestick pattern. Again, look at the volume here in the 16th week of December. You can see this is a very large volume, which is also selling, and this is also controlling the mid-term bias of this asset, because this is the largest surge of force that was brought into the market. Now, if you look at the MACD, you can actually see that the MACD is bullish, is bearish. You can see that the signal line, that the bullish line has crossed below the signal line. So this is bearish, and this shows that the sellers are in charge. And you can also see that the MACD bar is actually red, it's below zero. So this tells you sellers are in charge. If we look at the ADX, you can clearly see that the minus DMI has come on top of the plus DMI, although this just happened recently. So it's telling you that now there's actually a bearish sentiments in the market. Although the ADX is less than 20, so it's not yet confirmed, but it's telling you that the general sentiment in the market is kind of bearish. Also in the weekly time frame. If I go to the daily time frame, which is the last time frame we will look at, here you have the head and shoulder pattern, very obvious for you to see. And like I said in the previous videos, we want to see whether this pattern is going to be confirmed or it's going to be negated. And for it to be negated, the price action needs to go above the head. So long as we are within this structure, it's still bearish. But what we want to see is this right shoulder going to be confirmed? And once it's confirmed, that is bearish for the market. In terms of the MACD, you can also see that it's bearish. You can see that the signal line is above the level line, which is bearish, and you can see the bars are below zero, which is bearish. When you look at the ADX, you can see that the minus DMI is above the plus DMI, which is bearish. And by looking at the ADX is above 20, so you can see that it's kind of confirmed also in the short term too, that the market is bearish. So to summarize, on the monthly time frame, we are losing momentum. We are losing our bullish momentum, and we kind of have this dark cloud cover pattern that is ominous on the chart. On the weekly time frame too, we are also seeing that we have lost the momentum, the bullish momentum, because of this MACD that is crossing, and also this downward trend, and also this recent price action of minus DMI going above DMI. And also on the daily time frame, we have actually lost the bullish momentum and it's currently bearish. So yeah, that is my top-down analysis on the US large cap market, VTWO. Does that mean the market is going to be bearish? Does that mean there are no more opportunities in the market? No. And we're going to look at it together. Welcome to the second section of the weekly digest, where we track through the different financial instruments of interest and we give our short-term and mid-term bias. Remember, guys, we're in a new year 2025, and that means our year-to-date metrics has been refreshed to account for 2024 overall performance. Without further ado, let's start with the US large cap stocks tracked by the ETF VTWO. The week to date performance starts at 0.71 year to date. VTWO has delivered plus 0.46% compared to the previous year's overall 24.98 change. The short-term bias on the daily time frame exhibits a bearish trend, while the mid-term outlook on the weekly chart is neutral. Moving on to the Nasdaq, represented by the ETF QQQ, it's recorded a weekly gain of 0.60%, and its year-to-date performance stands at positive 0.83% compared to last year's return of 25.58. The daily time frame suggests a neutral bias in the short term, while the weekly chart also indicates a neutral bias in the midterm. US small cap stocks measured by the performance of VTWO experienced a weekly gain of 1.76%. Year to date, VTWO has delivered a performance of 0.84% compared to last year's overall gain of 11.55%. In the short term, the daily time frame is exhibiting a bearish trend, and the midterm outlook on the weekly chart is neutral. For Canadian equities, represented by the ETF VCN, this week saw a gain of 1.63%. Year to date, VCN has reported a return of plus 0.61% versus last year's overall gain of 22.16%. The short-term bias on the daily time frame is indicating a bearish trend, while the mid-term outlook on the weekly chart indicates a bullish trend. Switching to Nigerian markets, tracked by ASI, the week-to-date change starts at positive plus 1.42%. Year-to-date, ASI has delivered a return of positive 0.64% versus the previous year's overall gain of positive 37.65%. The short-term outlook on the daily chart points to a bullish trend, and the mid-term outlook on the weekly chart also indicates a bullish trend. Furthermore, the oil commodity tracked by USO recorded weekly gains of positive 4.09%. Year to date, oil prices have returned plus 1.41% compared to last year's overall gain of 13.35%. The short-term outlook on the daily chart is neutral but has a bullish signal. Similarly, the midterm outlook on the weekly chart is neutral, but there is a bullish signal also activated on the weekly chart. Finally, Bitcoin, tracked by GBTC, recorded a weekly change of plus 5.92%. Year to date, Bitcoin prices have returned plus 2.04% compared to last year's overall 113.81%. The short-term outlook on the daily time frame is neutral, while the midterm outlook on the weekly chart exhibits a bullish trend. Where may opportunities lie? This is a new segment which I've added into the weekly digest to kind of open your eyes to see where the opportunities lie in the short term and in the midterm. Let's go straight into it. By now, we know that the market is very dynamic, and for you to be able to, generate consistent profits from the market, you need to have an edge. And what I've tried to create here is a smart sheet that tracks the performance of different ETFs in the market. So we have in this sheet here, we have ETFs that are tracking the 12 sectors that comprise the S&P 500, like technology, healthcare, finance, industrial, basic materials, semiconductors. We also have ETFs that are tracking some of our commodities like PDBC. We also have an ETF that's tracking gold. We also have an ETF that's tracking defense, even aerospace and defense. We have an ETF that's tracking the medium cap, tracking insurance company, tracking Bitcoin, tracking energy, even tracking the treasury, 20-year treasuries. We have an ETF that is shorting the 20-year US treasury. We also have an ETF that is longing the 20-year treasury. We also have an ETF that is shorting the S&P 500. We have an ETF that is tracking the economy of some of the superpowers of the world, like Brazil, China, UK. We also have an ETF that is tracking the emerging markets. We have an ETF that is tracking the Nasdaq. We have a leverage form of that ETF. We also have an ETF that is shorting the Nasdaq. We also have an ETF that's tracking a specific team within the markets. For instance, this chart and ARTY, they are tracking robotics and AI multi-sector. This is tracking generative AI and technology in general. We also have an ETF that's tracking the Canadian market. Now, what is the goal of this sheet? This sheet, I'm able to evaluate the short-term performance like week to date, to even mid-term performance like 1 month, 3 months, 6 months, year to date, and so forth and so forth. Now, based on all this performance, which are called the metrics, I've created a score, which is talk score. A talk scores with me score, which is a weighted score of all this performance based on my own criteria. From this score, I've also created an adjusted score, and from this adjusted score, I've created a relative performance score versus the SPY. A negative score tells you that this ETF has underperformed the SPY based on my parameters, and therefore you see wherever you see zero, that tells you that should be your SPY. So if on this chart we just look for where there is zero, and that means that is the SPY. It's here. So you see where you see zero, this is the SPY. This is the performance of the SPY. Now, based on this relative performance versus the SPY and this adjusted score, I've created a weighted score. And this weighted score is used to rank all these assets within this sheet. And the goal is to be in the top performing ETF, in the mid-term. Here's also a momentum score, which I've also created based on the 1 month, 3 months, and week to date performance. So when you see including means this ETF in the 1 week, 1 month, and 3 months has showed a positive performance. Exclude means it hasn't honored that that instruction. And like I said, based on this sheet refreshes and displays the top sectors or the top performing ETFs, in the short to medium term. Now we can see USO here, which is the United States Oil Fund, as a top ETF, at the current timeline, and it's outperforming the SPY by 8.70%. Now let's try and perform a technical analysis on this asset to kind of see why there might be opportunities in this fund going forward. What I have on screen here is the monthly chart for United States Oil Fund, which is USO, which came out as the #1 rank in my live sheet. And let's quickly perform technical analysis on this. Now, this is the monthly time frame, the price candle. You can actually see that this asset or this ETF was undergoing a decline and it kind of reversed around this point. So if we come here and establish our trend line from here, we can actually see that this asset started creating let's do this. No, let's join at least two lows. So you see, once it bottomed out here, it started creating a series of higher lows and higher highs. This was an uptrend, and eventually, when the price reached this key level, it kind of broke out, but it was a false breakout, and you can see that since then the price kind of broke below this key region, and since then it has been trading within this range here, this two range. But what you can see is that as it was selling off, this region held, and basically this price action has been creating a series of higher lows. So again, we can kind of join this here, and probably we can just do this. You can even just take this away, just since this was in the past. And so this is what you can see has been happening currently. And typically you can see this is a W. This is something that is looking to form a double bottom. You can see this is forming a double bottom. And typically what we want to see is this candle break out of this key region that we know we have a confirmed double bottom, which is a bullish, very bullish signal. And this is occurring in the monthly time frame. Now let's add the MACD to see what information we can get from the MACD. And straight away from the MACD, you can clearly see that this region that that I mentioned that it's kind of basing. This asset is basing, and that's why you are seeing this kind of overlap here. You can't see any proper separation, but at the current time, you can clearly see that the level line looks to cross the signal line, which is bullish, and you can also see that the height of this separation has been decreasing, meaning buyers have been stepping into this market. Also, if we add the directional movement index, and customize as we typically customize it, clearly we can infer what's happening. You can see that the plus DMI is above the minus DMI, which shows buyers are coming into this market. The only problem is that the trend is not yet established because the ADX is around 8.9. Now, if we go to the weekly time frame, also to perform the same analysis here and add the EMAs just to get more information. The the red is the 10, the blue is the 10 EMA, yes, and the red is the 20 EMA. You want to see the 10, you can see that the 10 EMA has just crossed on top of the 20 EMA, which is a bullish signal. And in this last week, you can see this asset return 5.51. The MACD is telling you the level is above the signal, which is bullish, meaning buyers are in control of this market action. Although it's below the level line and signal below the zero line, but you can still see that this is a buy signal because the level is above the signal. And also the ADX is showing the plus DMI is above the minus DMI, which is also showing you buyers are in this market. And but only that the ADX is not yet fully developed because it's at 13. And if we go to the daily time frame, you can clearly see that the candle here is above the 20 EMA, which is bullish. You can see the plus DMI is above the minus DMI, which is bullish. And the ADX is developing, it's just at 13. And you can also see the MACD is bullish. You can see even the height of this separation has been steadily increasing on the daily time frame, which is bullish. So this is how I've been able to use the sheet to gauge which ETF has a strong momentum and confirm that by technical analysis. The last step is for you to understand what catalyst is actually supporting this movement that the spreadsheet and technical analysis have provided for us. Once you are able to get that catalyst, then you have full confidence that yes, indeed, something is happening in oil. Now let's get back to wrapping up today's video. As we wrap up this week's market summary, the global landscape continues to present a mix of opportunities and challenges. US large caps and small caps show very short-term sentiment with a neutral mid-term outlook, while the Nasdaq remains neutral across both time frames. However, the Canadian market stands out with a mid-term bullish trend, and the Nigerian market leads the pack with consistent bullish momentum in both the short and mid-term. The oil market also offers intriguing opportunities. Despite a neutral sentiment overall, both the short and mid-term signals point towards potential bullish momentum. This could signal a turning point for energy investors, especially as global factors continue to shape demand and supply dynamics. Bitcoin too remains a watchlist candidate with a neutral short-term sentiment but a promising mid-term bullish trend. Thank you for tuning in. Don't forget to like, share, and subscribe for more weekly market updates. Let me know in the comments below what you think about this week's market performance. See you next week with another market summary. Until then, trade wisely and stay informed.